All right, so here we are, last day of 2023, and I'm finishing with a green trade, which is great. You know, as I was saying that, I was thinking to myself, I wonder if I started the year with a green trade. And I don't remember because, you know, it's a long time ago, January 1st or whatever. And at the end of the day, it doesn't really matter whether you finish on a green day or you finish on a red day or you start on a green day or start on a red day. It doesn't matter. It's so easy for us to get over focused and fixated on every single day needing to be a green day. But, you know, the big picture is it really doesn't matter as long as overall you're making steady progress. And I made some great progress this year. Now, in this episode, I'm going to hold back on sharing with you my total end of year net profit. I'm going to do that in an upcoming episode, which will be 2023 year in review. And when I sit down and do that episode, I'm going to dissect my metrics, my analytics, and share with you some insights that I'm going to probably find as I go through it. And it'll give you a sense of the best way for you to review your own metrics to help you make some improvements for the new year. You know, this year for many of us was great. It was a somewhat difficult year in the sense that we were still mostly dealing with tighter economic conditions. The overall market, while it was up this year, was still well off the all-time highs up until just these last couple of weeks as the S&P got back towards the highs. So most of the year, the market was still kind of in this recovery mode, but I have pretty high hopes for next year because based on Federal Reserve reducing interest rates, certainly pausing and then reducing, I think that's going to help the market lift back up even more. So let's look at my trades for today. All right, so I finished the morning today with $2,205.78. That's a fine way to finish the week. It means that I will be green on the week, which is great. Yesterday, obviously, was not a great day, but I did have a good day the day before, and Tuesday, well, I can't remember now, but in any case, finishing the week here with a green day, and it's going to leave me green on the week. Once all of today's trades settle, I'll be able to export them and then look at 2023 as a full year. I could look at it right now, but it's going to be missing that one final day, so I'm just going to wait and look at it tomorrow. All right, so I started this morning with my first trade on sxtc. This is the first stock I traded right up here, and it's actually the stock that I made the most on, $1,200. So let's look at that chart first. sxtc hit my scanners early. It was like 7 a.m. when this thing popped up, and I was sitting down early this morning. I was here at 7. So as this started to pop up and pull away here, I guess I actually started at like 6:18, 6:30, and then right sort of at 7:05, it makes this nice pop here. And what I did on this one was I took my first trade, actually, again, same as yesterday, I took it in my margin account. I got in this at 361, and I got out at 376 with 1,500 shares. I was breaking the ice with my first trade, but as soon as I got in, I realized I'm in my wrong account, and I know that because I get an error message when I try to add more shares because I put a share size cap on that account because I really don't want to trade in it at all, but every now and then anyways. So that was a little bit annoying. So I got in, immediately realized I was in the wrong account, and I put out the sell order like 12 seconds later. So I get out of that, and then I switch over to my retirement account, and I add in that account. And I added at 379 and 390. But on this candle right here, it actually hit a high. So this was kind of dramatic. It hit a high of 397 right here. And then it dropped all the way down to a low of $3.40. I stopped out at 360. And that put me red about, I don't know, $400. And I was a little bit annoyed because I was like, gosh darn it. There we go. First trade of the day, I'm red. And I was red yesterday. So now it's like continuing kind of this red streak. And not a moment later, it bounces back up. I get back in at 4, and it squeezes up to 430, which was nice. So I was like, okay, there we go. Now we're getting in the zone. I added at 425, and it pops up to 456, and I took some profit at 455. Then I added back at 479, and it hit a high of 480, and then dropped on this candle back down to 402. So I stopped out, and actually on that trade, I went from up 800 to down 600. So I started down like 500, and then I got green, and then I went back into the red. And then it comes back up here, as you can see. And I got back in at 450 and sold at 494 as it came up to the high here of 5. And this put me back to up like $500. So already my P&L was like red to green. Not a great start to the day. And this is like 7:15. I've already taken, let's see. So by 7:15 this morning, I had already taken my one trade in the wrong account. And then the second trade, the third trade, the fourth trade, and the fifth trade. I already taken 5 trades by 7:15. So, and I didn't have a lot to show for it. It was not super productive, but some profit nonetheless. All right. So anyways, it pulls back. It kind of goes sideways for a little bit. And then as you can see, it kind of curls back up here around 8 a.m., 7:50, 8 a.m. It drops down again and it comes back up here. And I got back in for my next trade. It broke here and I bought this dip. And then I got this nice pop up to here. So that was at about 10 past 8. So I got in at 486, took some profit at 512. And anyways, added a little bit more profit to the name. I think that might have been, let's see. Yeah, those were my last trades. So my last trade was right through there on sxtc. At least I think it was. I'll double check. But anyway, so a couple trades on that, up $1,200 on it. Not bad. I was trading with small size. I wasn't going big. Last day of the year, red day yesterday, I was being conservative, which was actually the right move. You know, sometimes you'll choose to be conservative because you just had a red day and it becomes an opportunity cost because you end up missing out on the opportunity to fully capitalize on a big move. And if you'd been trading normally, you would have done a lot better. But today, trading more conservatively was the right move. The volume was light. Day before another 3-day weekend, a lot of people not even around this whole week. So it was the right move to trade with less volume, less share size, and be a bit more conservative. So then the next trade was CGA. So CGA was interesting because this stock made a really big squeeze yesterday after hours. So I'll open this chart up for you for a second. Actually, I don't want to be on the 10-second. I'm going to switch to the 1 minute. So CGA after hours goes from $2 all the way up to almost $10 at like 5 o'clock. Now, this kind of reminds me of CING 2 days ago. CING, not yesterday after hours, but the day before, squeezed from $5 all the way up to 10 and then all the way up to 22. Yesterday, NVFY after hours was squeezing up. Let's look at NVFY. So we were getting a little bit of this after hours kind of sympathy momentum, I think. So this was NVFY after hours yesterday. It goes from 5 all the way up to almost $10 a share. It's a great move. Okay, so that was yesterday on NVFY. Let's see. So then we had CGA, and what I thought about this one was I was like, well, it made this big move, but then, you know, it kind of sold off the whole thing. But right here, as you can see, it started to pop up. And I was like, you know what? If this thing wants to squeeze up, I'll give it a chance. It's Chinese stock, so you never know what these things might do. And I took a trade right here at $4, micro pullback. Pops up to a high of 440, ends up hitting a high of 460. Almost a 20% return. Nice move there from 4 to 460. Anyways, booked the profit. Just a small trade, $479. But, you know, a nice little winner nonetheless. Pulled back a little bit at the open and is kind of sideways or down a little bit now. So nothing too exciting there. So that was my next trade. And then I saw adtx coming up on the scanner. This was maybe my biggest disappointment today. I traded it fairly well as it was squeezing up, and then I gave back all my profit on it. So it started squeezing up. First, it pops up here at about 825. I didn't trade that. It drops down. It comes out up here, and I bought that pullback right there. Now, when you look at this chart, you know, you could see how I was able to do pretty well on it. So I got in this at $6.13, but I only bought 1,000 shares. So I was going a little conservative. So 613 there. It ends up going up to a high of 655, hits a high of 712. So I scaled in, I was adding on the way up, and I made about, oh gosh, I can't remember. I was up 2,500 on the day at my peak. and ended up hitting a high all the way up 750. So a nice pullback here, a nice pullback here, and then a double top right here. And then it actually was, it was right here. I added for the break of 750 right here, and I got caught in that false breakout, and it flushed down, it rejected. In hindsight, I don't know if there's anything I could have said that might have indicated I shouldn't have taken that trade. We'd already had the first pullback. We'd already had the second. So I was going in on the third pullback. Third pullbacks are a little riskier. We know that. It was sort of starting to look like maybe a little head and shoulders pattern for like a little small kind of pattern there. MACD was starting to cross over. Ultimately, it did cross, but only once the rejection came back down. Sometimes the MACD can start to go sideways and then it can open up again. So I think probably the biggest issue was that it was the third pullback right here. Anyways, and I got in a little too high. I got in right at like 47 or something. I was 45. I was looking for the break through that level. I got in kind of at the very top and then it instantly dropped. And I added it again at 7. I was like, let's see if it bounces off the whole dollar. And then I had to stop out. So that just wasn't a great trade. And unfortunately with that, I gave back everything I had just made on adtx. So I went from up $1,300 on it or something like that, and up $2,500 on the day, to up only 146. And I said, all right, I think I'm going to leave this one alone. I don't think I'm going to trade it again. Well, I did end up trading it again. I traded it again this morning as it squeezed up here at the open. We got a red to green move into a halt, a dip and a rip here up higher. And then once again, a little bit of chop, false breakout here, sort of topping tails. This was kind of the theme for today, actually. A lot of topping tails, which I think is probably because we had lighter volume. SNTG, this is another one that I traded, made $500 on it, but man, it was not easy to trade, despite the fact that, you know, well, so first of all, it made this big move pre-market, gives back the whole thing. So full retracement. Then it goes sideways for a while, halts up here. I missed that. Dip and rip on resumption. Very crazy. Didn't even have a chance to trade that. It was so fast. And then it does this kind of slow grind back up and halts at basically double top high a day. I thought, I don't know about that. It opens, it sells off, and then it kind of starts to pull away. But we had this false attempt here, and then this dramatic candle here, and this one. And I saw some people got stopped out on this drop right here. It did it again right there, again here. So one of the themes today also is that a lot of these stocks that were moving up did not have news. And I think that that probably gave short sellers a higher degree of confidence because they felt like, look, this stock doesn't even have news. You know, it's up 200% with no news. It's going to come down. And, you know, it has come back down quite a lot. It's also true that some of the biggest moves I've ever seen were on stocks that didn't have news, which can be infuriating for a short seller to have a stock go up 1,000% and lose on it when there's no actual news to support the move. But what ultimately happens on those is that early shorts get stubborn because the stock has no reason to be up. And so they sort of disregard the technicals and continue adding. But as it continues to go higher, they then get forced to cover. And, you know, that can happen for any number of reasons. It's a short squeeze. So, you know, so even though these didn't have news, I don't draw the line that I won't trade something that doesn't have news. Like, you know, that to me would be silly just because of the fact that look at how much volatility we have on some of these stocks with no news. There's volatility. Volatility equals opportunity. But generally speaking, certainly this year, some of the really nice moves we've had have been on pharmaceutical stocks with news. Those have given us some really big moves. So there is sort of a sweet spot of where I would expect to see bigger moves. This stock, SNTG, you know, had the right float. It obviously did put in a pretty impressive move from a low of like 2 all the way up to 8. But it was through this area, it was still on very relatively light volume, which means the liquidity wasn't great. It wasn't easy to get in. It wasn't easy to get out. There's a lot of slippage on orders. And so, you know, the result for me was that I didn't feel super confident with it. All right, so just putting girl outside there for a second. So anyways, got a couple trades on sntg, but nothing exciting. A CYTO was the only stock I was red on. This one popped up on the scanners. So if we look at CYTO, very low float, somewhat recent reverse split. Reverse splits have sort of been the theme recently. We've had these reverse splits that have popped up and made some big moves. Mullen earlier in the week or last week was a reverse split when it went from 8 to 20, right? So, you know, reverse splits certainly can work. So CYTO hits the scans and I pull it up, and initially, you know, I mean, you can see this was the move right here. So I jumped into it because it was moving. I was like, okay, look, the stock's moving. I'm interested. So I got in fairly high. I actually filled really high. I pressed shift 1 and I bought 1,000 shares. I filled at 494. Not great. And I was looking at it when it was at 474. So I got 20 cents of slippage, the difference between where I thought I would get filled in and where I actually got filled. That happens. So anyways, $200 of slippage. And then it drops down here and I had to stop out. High volume red candle. And when I say stop out, I mean I bailed out of the trade. No live stop orders pre-market, but I bailed out, just got out, and that was it. So cut the loss, moved on. It was the right move to cut the loss. You just never know. The thing that that is difficult is the fact that we've been in a market where some of my biggest winners this year have been on stocks that really hit the scans and just start ripping and off they go. And they just go crazy. So like this was the drop that got me, by the way. So, you know, all of a sudden you get this, and next thing you know, it's at 7 and it's at 8 and it's at 10 and you're up $3-4 a share with 5,000 shares, right? Those have been some of my biggest winners. And if we look at, you know, adtx, the first leg of the move, the first leg of the adtx move was certainly, you know, the cleanest. We got, let me just back this up. Well, actually, no, it wasn't. In this case, actually, I'm sorry. It wasn't the first pop that was the cleanest. It popped in reverse and then it rallied back up. SNTG was actually similar today, which is interesting. But it popped up, sold off, and then it came back up kind of later in the morning, which is a little odd. But in any case, sxtc, we could look at that one. That one was a little bit more kind of just started pulling away. And when they start to pull away like this, you know, you get a move from $2 to $5 a share. You know, those kind of moves, like let's be real for a second. I think that right there was the biggest move of the whole day. Yeah, it was. It was right in there. And it was on lighter volume. It hit the scanner and just started ripping. And so what I've found is that to capitalize in this area here, you have to be pretty quick. And so you have to make a pretty quick decision. Am I going to punch it or am I going to sit on the sidelines? And what I usually am looking for are micro pullbacks just for a moment, just enough of a dip for me to kind of be like, okay, I didn't just buy as it was ripping. It did pull back even just for a moment. And that was the dip where I was able to establish my entry. But one of the challenges with these types of trades is that when they're lighter on volume, you've got bigger spreads. And when you've got bigger spreads, the liquidity is not as good. So you can get slippage when you're getting in, and you get slippage when you're getting out. So unless you get a really big move, it's hard to make good money on it. If it only goes up 10 cents, you probably won't make money on it because you'll lose just due to the spreads. So the thing is, when I've seen stocks that have hit my scanners that really meet my criteria for being, you know, having a lot of potential, meaning, you know, they're priced between 2 and 20, they're already up at least 10%, but maybe even as much as like 50%. Let's say they're the number one leading gapper in the market. They have high relative volume. So even if the total volume is light, the relative volume is high. And what I mean by this is, well, it's a measurement. Relative volume is the average volume over a period of time. So if you're using 14 days, it's the average volume over 14 days. And then whatever you're at today is a multiple of that. It's either a multiple higher or lower. 1 would be exactly the same. 2 would be double. 5 would be 5 times, etc. But what I've noticed is that some of the really explosive moves will come from stocks like sxtc that yesterday had no volume. This had 170,000 shares of volume yesterday. And then today it blows up with 27 million. Now, CING, in contrast, today was a continuation day. CING, look at the volume profile. It's decreasing volume. We had the big day back here, and this was the day it made the move after hours. The previous day was 10,000 shares, 30,000 shares, and then this day it had 57 million shares of volume. So when you have those huge jumps, that's when things get pretty exciting. Now on this one, you know, you kind of had this slow day here, like those 2 days that were dead. Yeah, this really big day here, and then now it's kind of like tapering back down. So to me, that's one of the problems with trading continuation setups, is that the relative volume is always lower when you're looking for the bounce day. And as a result, you just don't always get that really nice bounce that you're looking for. So nonetheless, so when I see a stock that's hitting my scanner and it's like the price is good, and within this range, you know, 5 to 10 is sort of like especially good. So the price is awesome. It's the number one gapper. It's got high relative volume. It's maybe has a news event, which can be a little deceiving because sometimes you'll have stocks that have news, and you know the news sounds good, but what do we really know if we're not an expert in the field or an expert on that company? We can't really put it in context, you know. So like sometimes there'll be a headline of like, company secures $400,000 contract, and you're like, whoa, okay, I don't know, that's good, right? But they're spending $5 million a month and they're net negative, so it's like it really doesn't move the needle at all. Anyways, so news is ideal, and then you know the float. So when we have a stock that hits the scan or all of this and the float's 125 million shares, I pretty much immediately know that that supply is so high that unless the news is phenomenal, it's probably not going to make a big move. On the other hand, if it comes up and the float is, you know, 1.25 million shares, you know, now if this gets a million shares of volume, 1.25, it already has 1 times float rotation, which means all the shares available to trade have already changed hands once. And when we have some of these stocks like CING, you know, that has a 800,000 share float, this had a 57 times float rotation. Shares are just changing. That's when you get these really big moves. That's when things get exciting. So you're going to have higher float rotation on lower float stocks, right? 10 million share float stock with 10 million shares of volume is 1 times float rotation. The 10 million shares of volume on a 1 million share float is 10 times rotation. So that's where you get that exponentially more potential with the same amount of volume when it's a lower price, lower float. So, you know, I look at that, and when I see all of that, then I'm going to be faster to, you know, click the ticker, my charts update, my news window updates, and now I'm pulling up my level 2 right here. And while the chart's loading, I'm typing in FLJ, enter, and now shift, and I'm putting my finger on the shift 1 button, and I'm ready to buy 1,000 shares, or shift 2 or shift 3 or shift 4. Now I did take my hotkeys off of shift 2, 3, 4, 5, etc. to slow me down, just because I felt like I was getting a little too impulsive in the last couple weeks. I still have my hotkey for shift 1 for 1,000 shares. I can't do too much damage with that on the low price stocks at least. But anyways, I'll probably add those hotkeys back on maybe sometime next week. You know, depending on how the market feels. If the market starts to heat back up and we're having more volume, I do need to be able to move quickly when I'm seeing opportunities. I don't want to slow myself down when the market's hot, but when it's slow, it is good to have that kind of just double check to make sure I'm not being overconfident. So anyways, that's kind of my workflow. And the challenge with a lot of these fast moving stocks is that it is a bit of a race to jump in, because these stocks, we know, and we've seen it so many times, these are the stocks that, change the whiteboard like this, have the potential to go up, pull back for a second, shoot up more, pull back for a moment, shoot up more, and next thing you know, it just went from $2 to $6 a share without even a proper pullback, right? So now, by the time it does start pulling back, well, longs, once they see like a big red shooting star candle up here or something like that, now they're like, no, I can't buy this up here. There's another red candle coming back down. And now you end up either with a full round trip, which means your opportunities here were either to short and to wait for the reversal, but also hope this isn't the one that goes to like $12 and totally destroys you, or to get in pretty quickly. And so I'm trying to get in pretty quickly. I'm using my scanners. I'm using my tools to find the stock as quickly as I can and then jump. But even here, if the volume is light and the spreads are big, you know, I could get in right here and I'm thinking, okay, we're going to get this pop, or I get the drop right here. And now, you know, I'm at a 50-cent loss pretty quickly. So the challenge here, and what we saw with some of these today, is that we had this initial move, which some traders who were quick made money on, although the initial moves today weren't as big because the total volume in the market was lighter. So we had the initial move, which for a couple of them was sort of like a retrace. And then we had this sort of period of going kind of sideways, and then this sort of ascension. And this is an interesting period because this is where, like, we've got high volume here, and then sometimes we've got also high volume on the selling candles. And then it just kind of goes into like this sort of zone here. But in this zone, there can be a lot of accumulation. And as long as the stock is holding up, maybe, I mean, I'd obviously prefer it to be holding 50% of its initial move. But even if it's holding only 25%, there's still going to be people who are shorting it, hoping for a full fade back down to 0%, especially if they don't think the news is very good. And so then the longer it holds up and doesn't break down, longs start to add for a move higher, some shorts start to give up, and then you can have that capitulation where we start to squeeze up through new highs. And that's what we ended up having happen today on a couple of the stocks that we were trading. The one challenge is that sometimes what happens here is we start to get this sort of accumulation through this area, and then it pops, and then you know the story, it rejects. So you get that pop and then that nasty rejection, and it feels like this is like a trap. You know, like the market makers are kind of moving the bid up, 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 and then all of a sudden a bunch of people buy it, some people cover it, and then someone dumps an order for like 75 or 100,000 shares at the market, and it flushes. And now you have a chart that has this huge red candle, and it's just wrecked. It's ruined. So that's something that we have been dealing with a bit more this year, especially on breakouts out of consolidation, which has made me feel like the cleanest trades and the best trades have been the ones that are earlier in the move. And I have to be careful overstaying my welcome. So like if we go back to sxtc, and we can look at adtx on this as well, sxtc, you know, the beginning of the move here, when the MACD was still open and it was sort of still in the very first part of pulling away, you know, this was kind of the cleanest part right here. And then you can see we had the pullback. I'll get zoomed in here a little bit more. So we ended up pulling back fairly dramatically below VWAP, below the 9, all the way down to here. So now we're below VWAP, but then it punches back up through VWAP. I don't really like that trade. You know, the MACD is kind of, I mean, it's not a perfect pattern there. This pulled back really too much. It kind of comes way back up here on 1, 2, 3, 4 straight up candles. And then it comes all the way back down. So now we're like, okay, we've got a little ascending support here, which did help me on identify this dip trade back here or up there. And then it comes back up and I was like, well, but we've got this blue ascending resistance line right here. Is it really going to be able to break through that? And it kind of does punch through it, but then it drops. And then it punches higher and then it drops, and it punches higher and then it drops, it punches higher and then it drops more. So this one was choppy. ADTX, choppy at the beginning as well. First popped up, retraced that move. So that was sort of right in here. Pop, rejection. Then you got a nice big green candle. A pullback, decent, not bad. First pullback around 8:30, 8:45. A lot of traders are probably watching this. Got some nice trades on that from 6 up to 7, up to a high of 730. Second pullback, pretty good, up to 750, not bad. And then here now, MACD is starting to cross over. We go into the chop. Back below VWAP, choppy, choppy, choppy. Nothing here, nothing here. Pop, rejection, back up. Well, now it's halted, right? The dip and rip up here, look at this. Chop, 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 chop. None of this is easy. None of this is easy to trade. So in fact, this was probably the cleanest part of this whole stock, of this whole move on this one today. If we're going to be honest, that's probably the best part. SNTG, let's look at the best part of SNTG. Because these are the areas where I really think I should be focusing and just leaving everything alone. So you had this original move here, which was on really light volume with big spreads, so that wouldn't have been easy to trade. below VWAP, comes up above it. This spot here, I did not take this trade right here. I didn't see it at the time. It wasn't on my high day Momo scanner, I don't think, because it was below its pre-market high. But it did pull away, squeezes up and halts, does a dip and rip, and then comes all the way back down to VWAP. You could have had a dip off of VWAP here. You know, dip trades during this kind of pullback, I prefer to do dip trades when something is kind of nicely ascending higher. This, it wasn't clear at the time whether it was just going to pull back all the way. So I don't know about that dip trade, but it did bounce off VWAP. But then what I would do is I would draw this ascending support line, you know, kind of through this area, something like this, whatever. And then I'm thinking, okay, moving up, right? So it ended up being pretty well above that moving average in this area. It starts to curl back up. MACD almost crossing over here after the sort of drop down, opens up again, and then crosses over suddenly here on this big drop. So this one was, you know, this one was kind of not a super clean move, partly because you had a halt, open higher, sell off. Halt, open higher, kind of sell off, grinding higher. That's not super easy stuff. Not that we should really be surprised. It was the last day of the year and volume was light. There weren't as many traders in the market. And so things were a little bit more subdued. So anyways, you know what? I'm just grateful that I finished the day in the green. It's not a big green day for me. It's not my daily goal, but it's a green day nonetheless. And, you know, the last couple of weeks have been kind of choppy for me. I had 2 weeks ago, I had the biggest red day of the entire year, which was just, you know, it was a terribly frustrating trade. I just had one of those, got in one of those trades where I saw one yesterday like this, but there was a stock that was popping up pre-market and I jumped in and then all of a sudden the bid pulled like $2 a share. It was crazy. This whole year I've seen that happen a handful of times and I got caught in one of them. So I lost, it's like $5,000 on that, 6,000 maybe. And then I think I might, I don't know. Well, let's look. So let's see, what day was that? So we'll look at my metrics here. We'll see what day that was. Calendar, so that was on, yes. That was on the 13th. You know, the 13th, it's always a tricky day. All right, so up to 2,000, and then that was that swing right there. Biggest loss of the year. Oh, right. It was a full $9,000 loss, 10,000. It was on QNRX. Gosh, that was awful. That was so bad. And it was a 1 minute long trade. I remember just feeling like, I just wished like I could have pressed the undo button. But that's not how it goes. So this one was on the 13th. So we'll back this up. So like right now you can see it has no volume. Nothing's really happening. This was the day right here. This was wild. This was really intense. So this was my worst loss of the whole year. Okay. So it's a bad one. It goes from a low of $5 to $7.90. And then it goes all the way back down here to $4.36. And I think I got in with like 2,000 shares or something at like $7.50 or something like that. And then just instantly it was back down. That was confusing. It was confusing because there was news on it. Let's see, what was the headline? Now, again, I'm not an expert on reading the headlines. What did I see? It was a pharmaceutical company, right? So I'm like, pharmaceutical company, very low float, squeezing up. It's a somewhat recent reverse split. I was like, check. It had just popped up $2 a share. Let's see, December 13th. So announces FDA clearance of clinical optimized plan. We've seen headlines like this where stocks have gone up, 200, 300, 400%, but somehow on this one, it was different. And you never really know exactly why. At the end of the day, you just got to cut your losses and move on. But if I'm going to critique my worst trade of the year, and why not? Because I'm already looking at it. I would say that you know, I jumped in it quickly. I think I jumped in it quickly. I was really eager to hit like a big winner. I was like, all right, I really wanted to hit a big winner. And you could say, well, it pops up to 8. It dips down. I got in at 750. That looked like a dip right there for the leg up. And then what happened was all of a sudden it goes like that in one candle. So the biggest thing though was that I didn't look at the volume before I took that trade. The stock hit my scanner and I jumped right in. So that was a mistake, I suppose. But on the other hand, for what it's worth, you know, sxtc today, what was the volume on this one when it first started to pop up? You know what I mean? Like there was very light volume when it first started to pop up, and I didn't get in it until quite a bit higher in the move because I was waiting for more volume to come in, but that sometimes means you're going to pay a higher price. So sometimes it is the traders who get in very quickly, even when the volume is light, that can do really well. Anyways, it was light volume and it had popped up a lot, so maybe it was a tough combination, but nonetheless, this you know, I was happy to finish this week in the green. Had a red week last week, had a red week the week before, so that was not fun. And this week I'm back in the green, not by a lot, but you know, kind of trying to hold it together. And I'm hoping that I'll see some better action next week, you know, as traders come back, as we see more volume in the market, and hopefully companies putting out like good quality news headlines. Today I was like, guys, it's the last day of the year. What companies are putting out phenomenal news on the last day of the year? You know, I just don't think we're going to see a lot, and that was the case. So game plan, I'll be back at it first thing Tuesday morning in the saddle right here, right around 7 a.m. Hopefully we see some nice scans. But like I said at the beginning of this week, first day back from a long weekend, there's not going to be FOMO. People are going to be like, it's a new year, I'm going to be careful, you know, take it slow. So first couple of days getting settled in, we'll see what we get. But as soon as we see something that starts to open up, that's when it's going to be game time, and I'm going to look to capitalize on that momentum. All right, so thanks as always for tuning in. I hope you hit the thumbs up. I hope you're subscribed to the channel. Come on over to Warrior Trading. We've got New Year's Eve sales going on right now, so you can check out those sales and specials on our website. And I will do my 2023 year in review coming soon, so you guys can look forward to that. All right, thanks as always for tuning in. A reminder, as always, trading is risky. My results aren't typical, and there's no guarantee you'll find success. Whether you trade with me or you learn on your own. So please take it slow, manage your risk, and I'll see you back here next year.